Hello, it's Monday the 24th. I'm FxPlew and this is the Market Brief. So ahead of next week's MPC meeting and the rate decision next Thursday, we can probably expect plenty more debate over the size of the next UK rate hike. Was last month's 50 basis points just a knee-jerk to the May inflation data, or have they got the minerals to follow through with more aggressive rate action? Sterling nosedived when the inflation data was released, and where inflation fell more than expected, price action in the market now suggests a 25 basis point rate hike is the more likely outcome. Also, don't forget that super hawkish Silvana Tenreiro has left the MPC, and her replacement, Megan Green, may take a bit of time to bed into the role. But who knows, there's definitely still a case for another 50 basis points, and the Bank of England may be encouraged into more aggressive action, seeing how the Fed has got on in the US. Now, over in the US, the main focus is on the Fed meeting this week and the chance of a 25 basis point rate hike before the summer break. Powell is in favour of this because although the headline inflation fell to 3% in June, there are still secondary effects keeping core inflation higher than he would like. Of course, the recession risk will be discussed alongside any rate hike, because while most of the frontline data is beginning to post respectable numbers again, there are longer term elements that still point towards the chance of a recession. The longer term view on productivity isn't exactly a bed of roses, and the yield curve inversion is a hot topic for recession twitchers. This is when short dated bonds are priced higher, with higher yields rather than the longer dated bonds. Normally the opposite is true, but historically an inverted yield curve has been followed by a recession within a couple of years, and that of course has got all the doom mongers up in arms. All this carries implications for the dollar outlook too. Expectation is for the Fed to call time on their rate hikes after a final 25 basis point hike. After that, the relative yield for the dollar will be eroded as the UK and the Eurozone continue their interest rate hikes, and we may well see a steady decline in dollar value. For now, the dollar index is holding up over the 100 level. We closed out the week around 101. As sterling slipped to 128.15, handing back the gains from the previous week. We open around 128.70 against the dollar. We're 115.60 against the euro, and euro dollar is around 111.35 this morning. That's it from me. Have a great day.
If you do not have a clue, then just tweet through and ask FxPlew.